Hello traders, welcome to another daily recap. This is for Tuesday, August 13. It's currently 8:38 a.m. The levels you see on this chart are what we will use for E-mini trades today. If the SPY hits a level, we'll take a trade per a set of rules following a procedure. And this strategy has a tendency to pull base hits out. And the base hit is defined as 4 ES points or more. Depends on what else is going on, but that's the minimum because they tend to react in these, like SPY tends to react in 40-cent stair steps when everything's acting normal, and the SPY, the equivalent is 4 points. But these are the levels. I don't see anything unusual in terms of data releases. I shouldn't say unusual. I don't see anything that could jolt the market like a data release of some sort. There was something at 8:30 that moved it, but they've been climbing a little higher. They're at 536.48 currently. Don't have any levels plotted above 538.08. But in any case, we'll come back after the market closes and analyze whatever happened, and we'll talk about it then. Catch you on the other side. It is almost 7 o'clock. The market closed 3 hours ago, and they went off the charts. So let's take a look at what happened at the one level that the spiders hit and how you could have traded it. So there was one trade. There will be no recording of that trade today. I just got set up in the office when they were coming up into this level. Took a quick short trade before I had everything set up to record. Got a base hit, and then they never got down to this other one. So I guess I'm getting ahead of myself. Let's talk about why you would have taken this or how you would have taken it. So after 9:45, they were heading up to it. It's pretty clear. So this level adjusted would be 538.03. Just a simple short trade taken there. Got out of the money a little bit, but no harm, no foul. They weren't anywhere close to being in the danger zone. They came down, and there's a base hit of at least 4 points. That's what I got. And then they came up close of 536.18 and pulled up, and that would have been really nice to get this trade because oftentimes they'll spike the low of the opening range, which is right here, and this level happened to be out of the calculator this morning. So a lot of good reasons that they could have found some support down here and bounced up and could have trailed this thing up for a while. Also another lesson here, which I've mentioned plenty of times before, but after this trade was taken, I just kind of changed this to show that it's been satisfied, or this level's been satisfied. After this one trade happened, I'm not going to take another short trade at that level. If they came back up into it, if they came back down into this level after a period of time, I'd take it for a long trade, for a recycle. They did right here, I think, to the penny, but I want to see more time. So this is really just one trade here, and that's it. And I did mention in the email that I sent out this morning that if they got much above 538.08, I would identify levels in real time, possibly. I did see some levels higher up, but I was pretty busy, honestly. When they got above this and started climbing, I looked, but I was busy, so I just honestly didn't mess around with anything for the rest of the day. Took that one base hit, and that was my only trade. And plus, no one actually emailed and responded back and asked for the levels, so kind of off the hook a little bit. So one trade, this log here you're looking at is the playing by the rules log. Every single level hit is treated the same way for base hits of 4 points. That's it. So 3 levels yielded 12 points. This is a really nice trade here. 24 points was all multiples of 4. A fumble or a TKO could be more. This is a max loss limit here of 20 points. But you can go back and look at that video if you want to learn more about that. It really wasn't, because at some point in the day you would have had 12 points. But I'm just kind of pointing out some of this that's color coded here. Essentially, a TKO in my book, a technical knockout, is 2 fumbles back to back. Doesn't happen very often, as you can see. So all these numbers are important. You can take a look at all that. Here are the personal trades just to compare. No difference in terms of today's trades, just one base hit. The numbers are the same. And just kind of back and forth. And since I've been comparing March through now, we'll do that right now. So why am I doing that? Is because in the middle of March of this year, it was the Ides of March. It was the 15th of March. I had a trade that just got me a lot of points, trailed 4 contracts down for quite a while. And I realized, I've been doing this occasionally, just taking some creative liberties, so I might as well track that separately from this playing by the rules log, because I want to see how it compares, and you guys can see how it compares. This is the playing by the rules log from March through today, and this is my personal trades from March through today. So you can see how everything changes a little bit. There's less trades, different profit and loss metrics, daily averages, average dollar per hour. And by the way, this dollar per hour here, that's based on 9:45 a.m. to 3:30 p.m. Eastern time, which is 5 hours and 45 minutes, because that's really the time I trade. So if you want to look at the productive time on average over time. There you go. Trading, say, 4 contracts. There you go. Not too bad. But that's it. Thanks for watching. Hope you learned something, and probably going to get back on schedule a little better tomorrow. Pretty busy day at the office after a 2-week vacation. Tomorrow morning before the opening bell, I'll have new levels on the board sent out to the pre-subscribers, and we'll talk about what happens after the market closes. But we'll catch you tomorrow. Have a great rest of your day.